Hi there, I'm Scott McGregor, swing trader at Stock Market Mentor, and I'm joined here with the president of Stock Market Mentor, Dan Fitzpatrick.
Right.
Dan, with the state of the market right now, I think it's really important for traders to really focus this year on taking the next step in their trading journey and their growth. And so I thought it would be a great opportunity to kind of pull from your experience and help traders actually figure out how to do that. So one thing that I really want to know from you, and something you really talk about that's really important, is knowing what kind of trader you are. And so, how do traders go about, first off, despite, reading charts and trying to figure it all out, how do they figure out what kind of trader they actually are?
Hey, those are really good thoughts, and it's really important because here's the thing: if you don't know what kind of trader you are, then how do you know whether you're getting better or not? And one thing I've learned, this isn't a new concept, but it probably is for most people. You can't improve on something if you can't measure it, and so you have to be able to measure not what you want to do, but what you actually are doing. And then when you look at that, like, what am I actually doing? Okay, well, crap. My average holding period is 3 minutes, but I'm trying to be a long-term trader. Okay, well, you're not a long-term trader. You're basically a day trader. And various other things like, well, I like to buy stocks and just hold them for a long period, or buy a dividend stock like Annaly Capital. We held that for, probably a year and a half, and it paid us 22 cents every quarter. And our initial cost basis was $7.30. So, you multiply 22 cents, by 6 or 8 times. That's a pretty good return. Okay, but if you're a short-term trader, you're not going to be able to handle that thing because it'll just be boring. Even though you look at the money that you're making, that's not enough. That's literally not enough motivation for people, or getting away from, from dividend stocks. Maybe you just like to hold things for the long term, and then you wind up seeing, as you measure your trades, as you actually look at your results and look at the ugly truth, you're holding a stock for 2 weeks and you sold it because it had just kind of a natural reaction pullback, but you were afraid of losing the money that you'd already made. So there's all of these different things that traders do because they don't even know what kind of trader they actually are already. And so, figuring out what you're doing first is the key step, because then, you can say, okay, well, hell, I'm trading like a day trader, but I sure stink at it. And you go like, well, maybe I don't want to be a day trader. Okay, fine. That's what I am now, though. What kind of trader do I want to be? And that's actually where your work starts, because you know who you are, you know what you are, and you're not really happy with it. You want to change your behavior. And so when you work at it from that angle, you're working at it from an objective place, not a subjective place. You're looking at what you're doing, you're measuring it, and you're saying, I need to change those measurements. You know what I'm talking about?
Yeah, I think you're really talking about time frame. And, if you want to hold stocks longer, if you want to be part of that overall trend, you got to get your eyes off of 1 minute charts. You shouldn't care what's happening on the 1 minute chart. You should zoom out. And so I think what you're saying is, depending on what type of trader you want to be, a position trader, a swing trader, a day trader, in my opinion, every one of those has a certain set of time frames, and kind of a universe that you live in. And then you don't worry about what happens outside of that universe, because you need some sort of framework to accomplish what you're trying to do.
Yeah, that's right. A couple things. First of all, Dave Ryan's a friend of mine. He was really in on the ground floor with Bill O'Neill at IBD, ran money. I think he was World Trading Investing Championship, U.S. Investing Championship winner, I believe 3 times. So Dave knows what the heck he's talking about. And by the way, he's also the nicest guy you will ever meet. So much for needing a killer instinct in order to trade. If that was the case, Dave would never make a dime. But one of the things that he said, which really kind of was news to me, he said he never saw Bill look at a daily chart. Mm-hmm. He said all Bill looked at was a weekly chart, and he had his methods with respect to stock selection, position size, entry, stop, because he did use stops. People say stops don't work. No, you just don't know how to use them, dude. And then he also knew when to exit, and his exiting was always kind of in scales. Very rarely did he just punch, pull the ripcord and get out of all of it. But what Dave was talking about was Bill O'Neill didn't care what the oscillations in the stock were doing, certainly intraday, but he didn't really even care about the daily chart. All he cared about was the overall trend, because that was a good reflection of what institutions are doing. And I know you're on MarketSmith along with me, which is an excellent resource.
Yeah.
I remember when Wanda, was out, that was William O'Neill's, I don't know.
That's his institutional product, right?
Yeah, I forget what the DA is, but yeah, that was his institutional product, and it's not available anymore. I actually visited Dave, ages ago. I think it was like 2000 or 2000, whenever it was, 2003. And in his office when he was running a hedge fund in Santa Monica, and he had this big, cool thing on with these charts, and they were blue and pink, which I'm going like, what are you doing there? But they had all this data on it. And, I said, like, what was that? Because I was actually executing some trades for him, not planning them. But I said, what's that? And he said, oh, that's Wanda. And he kind of showed me some things. And so that all went away. And I asked them probably a year ago, so guys, whatever happened to Wanda? Because that'd sure be something that interests me. And they said, well, that's what MarketSmith became. I mean, that's what Wanda became, was MarketSmith. There were, we made a couple changes. There's one or two things that aren't in there, but we're not even doing Wanda anymore. It's just all MarketSmith. And so that's kind of a cool, we're totally digressing here, but that's really a cool thing about trading, about investing, essentially about the world and where we are now in technology. So many things are becoming commoditized. What used to be super, super expensive things, very limited in distribution, like Wanda, they figure out a way to do it differently. And suddenly it's available to the masses. I mean, for example,
I think you're right. Technology causes deflation, right? You see it everywhere.
Yeah. And technology is really disruptive, because even if, you think about it, even if the product doesn't change, but you find a way to make it accessible, not to 1,000 people, but to 1 million people. Again, the product is the complete same, but you found a way to deliver it. That's the difference between Blockbuster and Netflix. Mm-hmm. When Netflix came on the market, I believe, that was certainly the week that Blockbuster, which I don't even think is publicly traded now. If it is, it shouldn't be. That was the very week, and maybe even the day that Blockbuster peaked. And why was it? All Netflix was doing was delivering movies. They were sending them to you. And then later, they were online. Meanwhile, Blockbuster, you had to go there, rent the DVD, stand in a long line. And it seems to me like every long line I'm in, whether it's at the supermarket or Blockbuster, the people in front of me are having big issues. they're there. Well, I want to return this, and then I want to do that. And can I change my account? And I'm just going, all I want to do is rent this CD on Caddyshack. So anyway, what I'm saying is that everything changes. Everything changes. and when I started Stock Market Mentor back in 2005, we had I had a website on Cold Fusion. Video content, video delivery was brutally bad and hard. I started with 22 members. Now I have multitudes of that. And I've gotten better. Sure. Who wouldn't after, almost 20 years, but it's been the availability of technology to get my stuff spread out to a wider group. But this is the point on that. Just by virtue of the numbers, the multiples of people that you have, your product is going to change. It's going to change just by the fact that more and more people are looking at it. You're going to make changes based on the things that you're learning from that. But let me bring this all back around. This is really not that true, not true when it comes to trading. And this is why, because there's only certain things that we can control. Sadly, a lot of times they're the wrong things, but there's only certain things we can control. And you think about this, Scott, we can't control what the market does. We can't control what the Fed does. We can't control the political or even the economic environment. There's so many things, geopolitics, even development of technology. We don't know what the heck Zoom's going to do. We don't know what Microsoft or Google or anything, any of these things are going to do. We just simply don't know that stuff. So we have to say, all right, well, I'm going to forget about the uncontrollables. Don't care about them. All I care about are the controllables. And so what we can control in our trading is only one thing. That's our actions, our decisions. And just kind of tell me what you're thinking about this list. There's maybe 5 things that you can control. You can control stock selection. What you're trading, what you decide, I'm going to buy this stock. You can control the number of shares you're buying, which is how much money are you going to put into that trade. You can control where you're going to put your stop. You can control where your exit is going to be. And you can control whether you want to add more, whether you want to, reduce it and things like that. There's all these different aspects of each of these basic elements, stock selection, entry, position size, stop, and exit. There's all these different aspects of those. And so they kind of have subsets of what you can control, but that's really it, don't you think?
No, I think you're right. And I go back to time frame as well, because I believe that every trade needs some sort of time frame mindset. Like you and I are both long in crypto as a long duration asset, holding it for multiple years. So
I should have sold a couple months ago.
I know. I sold some speculative stuff, but But and so okay, so yes, it's frustrating to see that volatility, which by the way goes both ways. But if you're setting your mindset up for, okay, I don't really care what happens in the short term because I'm looking long term, then you have to trade that in a specific way where, if you're day trading something, you're going to look at different time frames and your actions, your entry, your exit, all the things you're talking about are going to be much different.
Yeah. And the thing is, with respect to, Bitcoin with crypto, because this is an obvious example, everybody knows within a certain period of time, a year or two or whatever it's been, it went from, 20 or 30. I mean, we can reach further back and go, why didn't I buy Bitcoin when it was $5? But anyway, you look over the last couple of years, and what I'm getting to here is that what's the type of trader and what are the factors that you're looking at? If you look at this and say, when I was kind of buying it all the way up, not where it is now, but I think I stopped at 30,000, maybe 36,000, which isn't too far from where it is right now. But this was my process. And this was because my wife was beating me up for doing the wrong thing at the wrong time. She's a lot smarter than I am and much better looking. But anyway, so we talked about, okay, what the heck are we doing with Bitcoin? And we both decided that we were just going to be long-term holders. hodlers, if you call it, right? What's it in
Right.
that for? Hold on for dear life.
Yeah,
I
something
guess.
like that. Yeah.
Something like that. But anyway, we decided that we didn't care what Bitcoin was doing next week, next month, even next year. We put a certain amount of money in it, and it was not an insignificant amount of money, but it was just a small percentage of our net worth, because you want to kind of spread your stuff around a little bit, but don't get nuts on it. And so we put an amount in there to where we decided, you know what? If we lose all of it, we're not going to miss any meals. And so we made a decision that we care more about what it's going to be doing in 2030 than 2020. And so, and this is one of the reasons why. Like I looked at it when it was up at, I think 66 or 67,000. Isn't that kind of where it peaked?
Around 69. Yeah.
Yeah. And so I was taught, see, I knew I should have sold. No, but so I was talking to my wife about it at that time, about, maybe we should sell a little bit just to kind of take some profits and maybe it'll pull back. But then we really started looking at the math, which is what most people don't do. We're long-term holders in Bitcoin, and we didn't have some to really be trading, but I live in the People's Republic of California. They want a lot of money from me, and it's not even deductible on my federal taxes, which, when I lived in California a long time, and our taxes have always been deductible from the federal taxes, which basically is a socialism thing. Like, I like the people in Nevada, Tennessee, Texas paying part of my state taxes. Thank you very much. Well, they even took that away. So now, every year I'm paying at least 50, more like 60% of my income to taxes. And so I'm not griping about that. That's for another time. But I'm just saying that's the reality of it. And that's the reality of trading. And
you don't want that tax event to happen if you start trading, especially a high dollar asset, right?
Okay, you think about this. So let's say I bought something at 30, I'm selling it at 70. So I made, $40,000, which is more than 100%. What's that? 120, 130% return on my money. Okay, fine. So I'm paying 60% of that in taxes, which means I didn't make all that money. The stock ran up, clear up to heaven, and I took profits. And it's like, I might as well have sold it way down below, and I'd have made the same kind of money if it was tax-free. So the point is, if you need to sell something to get out, then fine, go ahead and do that. Taxes don't matter, survival does. But most of the time, and this is definitely the case with retail traders, they look at a stock and they go, okay, I got to take profits in this. And at the end of the year, they're looking at their account return, and hell, they made 50, 60, 70, 100% on their account. That's really great. And then when they're paying their taxes, they're wondering why they're so high. And then they realize, well, crap, I've been taking all the risks so Uncle Sam can get all the reward. Institutions don't do that. I know, because we have some of our money being managed by a large institution, and we get letters on a fairly frequent basis saying, hey, we'd like to move this to this or do this and that, because the tax consequences are very, very minimal. They're always thinking about taxes. And that's one of the big differences between retail traders and large money managers. They have to think about taxes. We don't have to. And so, like with you, Scott, you're a real you're a short-term trader. You're a swing term. You are a swing trader. I like to trade a little bit longer because I'm almost 64 years old. And frankly, I'm tired by all the zigzag and zigzag. I'm just kind of looking for that.
Right.
And so you don't really have any tax issues. You shouldn't even care whether it's December 31st, January 1st, it doesn't matter. I really don't either in my retail in my, my trading accounts. But these are the types of things that you have to look at, just kind of, and I know we've had a huge digression out to left field, but you have to look at this type of thing and say, do taxes matter in my trading? If they do, you are a totally different type of trader. And that's the last factor that you have to consider, because you can control how much taxes you pay just by virtue of whether you're going to take income or not. And
so, no, I think that that's a really good point. And something that, something that is serious, that a lot of people who are, looking on the outside of the glamour of day trading and all this stuff, they don't think about that. They don't think about that tax event that they'll get from selling that option that went up 5,000% or, whatever it is. So I think that that's really important. Also, I think that account selection is important. So I do a lot of trading in a retirement account where taxes are not an issue. And so I can swing trade in that account and it doesn't matter. And so knowing what kind of account you want to set up can help you determine, okay, this is my long-term account for my long-term trading. This is my short-term account for my short-term trading. And this is my day trading account where I'm just going to have a little fun.
No, that all makes sense. And one other thing, if you're doing it that way, it also forces you to keep track of exactly what you're doing. Because if you are trading different in your retirement account, then you need to look at that account and say, what the heck am I doing here? Am I doing this the right way? Or do I have, style drift, as they say? And that's easy to have when you have different accounts. So you're not specializing. You're not a specialist trading one account in a certain way. You're a little bit more of a generalist, or pardon me for my throat, COVID. So anyway, you're a little bit of a jack of all trades. You got to kind of shift around. Okay, I'm doing this in this account and this in this account. And one other thing that you got me thinking about is, what about the free commissions? Everybody's trading commission free. And so this is what I would challenge anybody to do. Okay, you're trading commission free right now. So buy, sell, price is the price, and that's that. And so at the end of the year, let's say you made 30% or 100%. I don't know, pick your number. Let's say you made 100%. And this is like the third year in a row that you've made 100% on your account. But you're looking at what the actual profit or loss on each trade was. But factor in those goofy $7 little commissions on the entry and on the exit back a couple of years ago when you were paying that. Now, how much of your trading profits did that eat into? And it's a big number. I can tell you this from personal experience. There were 2 years in a row, this is several years ago, when I didn't make any, I actually lost money for the year, even though my batting average was pretty good on my wins versus my losses, and the percent gain that I made versus the percent loss. But this is ultimately what it looked like. I was really, really hyperactive. It was, okay, oh gosh, I made 3.5% on this. I'm going to go ahead and take that profit, short-term trade. And then stock goes down 2%. Oh, not going to take a big loss. I'm out of there. And then I go into the next one. I trade, really, really, I'm trading like a shark swimming through a bunch of chum, or, whatever. It's just like every shiny object I'm going for. And so then I looked at the amount of commissions that I paid, and I actually would have done better if I had just, gone golfing or something, because commissions were that big a deal. But if you just look at that and say, oh, well, the brokers are screwing me and stuff like that. No, that was actually a real blessing for me, though it didn't feel like it at the time, because it showed me, it taught me, I couldn't help it. It smacked me in the face that I was trading too much and I was not taking enough from each trade. And so I didn't have much wiggle room. I mean, if you're getting charged, say $15 for a round trip, and your commissions are actually eating into your profits, well, think about the math. What are you doing? You're making money for the broker. I never got a thank you card from TD Ameritrade, ever, not one. And it kind of ticks me off. But anyway, so those are the types of things that you have to look at if you want to trade profitably, consistently. But I want to get into something else, and that's the role that discipline plays in this. All of these things that we've been talking about, tax issues. What type of trader are you going to be? Where's your exit? Where's your entry? What's your position size, your stop, all of that stuff. Let's say you have all of that stuff dialed down. And here's the little secret. What's really not a secret. There's a gob of trading books out there. Most of them aren't very good, but some of them are really, really good, like really good. Anything that William O'Neill ever wrote, that's gold. That's gold. Yeah. Hey. Why, yes, I could go over there and get mine too, frankly. But Bill O'Neill's stuff is really good. If you want to take one book and learn everything there is to know about it, and be really, really good at what you're doing, you look at that book you just showed, How to Make Money in Stocks. Another guy who's written some really awesome books is Mark Minervini. He's a friend of mine. And I like him very much. Yeah,
that one too.
And that's an old picture, by the way. And I like him very much. I respect him immensely as a person, but certainly as a trader. And he's like, Mark's when it comes to trading, Mark's a little bit like, I probably could come up with a better term, but a robot, because he has certain things that he looks at, and if he doesn't see them, he doesn't trade them. And there's I've gone to several of his workshops, and, we're not going to, turn this into a Mark Minervini fanboy club, but he has certain entries he looks at. He has certain ways that he selects stocks and all that kind of stuff. And he is the most disciplined trader that I've personally ever known. Very, very disciplined. And that's really where it gets down to, what are you doing here? You can have your process for all of these things that we've been talking about, but if you don't have the discipline to stick to that process, then your process is actually meaningless. In fact, it's actually worse than meaningless. And it's a negative thing. And I'll tell you why, because you're trading under the illusion that you know what you're doing. And you don't. You know what you should be doing, which is different than actually knowing what you're doing. And so if you don't have the discipline to follow the rules that you've created and that work, then over time, you're going to get so frustrated by trading, and your illusion's going to be, well, crap, I have this process, I have this plan. Why aren't I making any money? Because every single trade that you're making is an exception. I know this isn't a perfect setup, but you know what? I'll take a shot, I know I should be selling this now, but you know what? I'm just going to hold it for a bigger move because I really like the company, so you do stupid things like that. And that's not calling an audible. That's just not having any discipline. You can, again, you look at dieting, you have the best diet in the world. I know, I'm going to cut out my simple carbs. I'm going to eat good protein, complex carbs, plenty of vegetable, high enough fat. And I know that's going to work for me. Right after I finish this pint of Haagen-Dazs ice cream, or something, well, I got to finish that one bag of Doritos up there.
Yeah.
And so that's just a function of discipline. It's like, you have a plan. It might even be a good plan, but if you have no execution, you're kind of done. And so one of the things that, in fact, it's funny you mentioned at the outset about the next step, taking the next step. I'm teaching a course in March. I forget the exact date. You can check the website on all of this kind of stuff, and I'm calling it the next step. And this isn't a promo for that, but I'll tell you in a nutshell what I'm going to be talking about. I'm showing trading process, stock selections, entries, position size, stops, exits, and all the little nuances of each of those. But what I'm really emphasizing too is something that, and I've paid over $100,000, more than that, in courses throughout the years. I don't know how many books that I've read, but it's been more than one or two. And one thing that I don't ever see taught or discussed is, here's your process. Now, the most important thing is, let's talk about how you have the discipline to continue executing this process. And what it really gets down to, I just thought about this. I'm a huge Kevin Costner fan, and one of my favorite movies is Game Day. And I'll tell you exactly why that resonated with me, because they're showing this stupid yellow Post-it, throughout the movie, while this guy runs around, first draft pick, and we're going to do this, and, Bo Callahan and this and that. The whole movie was that. And then right at the end, he picks this Vontae Mack guy. And during the climax of the movie, don't want to spoil the movie for you though, he throws down that Post-it, and the coach opens it up, and it goes, Vontae Mack, no matter what. And so what this guy did was he had his plan. He had his plan all worked out. He knew exactly what he was going to do. And then in the heat of the moment, he called an audible. He was doing all kinds of stuff. The whole movie was made around him doing crap that he shouldn't have been doing. But then at the very end, his discipline won over, and he picked Vontae Mack. So one of the things that I've taught in various workshops is I just show a picture of that. And then I explain, hey man, if you don't have a plan and you don't have the discipline to it, you might as well throw the Post-it away. Mm-hmm. And so one of the things that I'm going to be talking about in that course is techniques, specific techniques that people can be employing in order to keep their discipline. In fact, to a point where you can't deviate from your discipline. Unless you first look in the mirror and saying, you know what, I'm really an idiot here. I feel like losing money. I want to lose money. I love losing money. And this is a great opportunity for me to throw away my discipline and do that. It'll be that obvious. And so to me, the discipline's the big thing. And I want to talk about that with you a little bit and see what some of the things that you deal with respect to discipline. But I was, remember that movie Moneyball? I don't know if you ever saw it. The Oakland A's and Billy Beane. And one of the things that you got to think about this with trading, one of the things that he said, that Brad Pitt's character said in the movie was, man, I hate losing. And then he said, I hate losing more than I love winning. I hate losing. And so, I thought about that, and me too, man. I hate losing. And just in life, I hate losing. I actually expect to win on something. I expect to accomplish something. So when I do, it's gratifying, but it's not fist pumping. It's I accomplished that. It's what I expected. But when I don't, I feel like an idiot. Well, think about this in your trading. Think about the pleasure you take on a trade that's profitable. And then think about the pain that you feel on a trade that's going against you. Now, I know you're a lot like me. We talked about it. You don't tolerate losses. You'll take them before they get painful, right?
Oh yeah, 100%. Yeah, I have a system for my stop losses, and I know where I'm out on every trade.
Well, that's in your course. That's in your course.
Yeah, that's right.
Yeah. That's one of the things that you taught in your course. So, several months ago.
But one thing that I think you're really getting at, Dan, and because people can have or say they have discipline when the market's doing this. But as soon as the market does this, that discipline seems to go out the window. What do you think are ways that people can kind of stop themselves from making money here and giving it all back here?
Yeah, well, yeah, I definitely have some thoughts on that. But what you're saying, I'll put an exclamation point on what you just said. That is the biggest issue that the average trader faces, is during a certain kind of market, they're doing really well. Typically on what we're talking about here, trading the trend, the market's going up, buying a stock, yeah, buy anything, buy dogcrap.com, whatever it is, and buy it because the market's going up and you're a genius. Sure, if you bought something else, you'd be making more money, but your trades are working. Wow, you're really getting good at this stuff. And then the market changes direction. You don't adapt. And so you wind up giving back all or even more of the money that you made. And then by the time the market changes back to that, that easy market where you made money before, you have a lot less money. You have no incentive to trade. You're just kind of done, or you look back, and this has definitely happened to me. I was never trained on Wall Street, which I'm really happy about. But I've made every mistake there is to make, and many of them many times. But if you find yourself where your account's doing really, really well, and then you lose a lot of money, and then your account does really, really well again, and then you lose a lot of money, you do that a few times, and what you really are is just a channeling stock. And you're wondering at the end of the period of time, like, I've been making so much money on this and that. And yeah, I lost some here, but then I've had this really good thing here. Why is my account balance the same? And it's because of what you're just, talking about, where you make money in one kind of market and then don't stop what you're doing, don't adapt when the market changes.
And that's coming back to your course here, that's what having a process is all about. And kind of what you're talking about, Mark Minervini, Mark's book is his process. And it's just like, this is how I trade, and I don't do anything else. Yeah. And so, that really, in my opinion, is what separates a consistent trader from someone who, as you will often say, is just playing the market. I'm playing the market right now, but yeah, it works when the market's easy, and the market will bail you out for buying the dip randomly, but sometimes it doesn't. And then that's where those big losses can happen. Those unexpected losses can happen.
Yeah, it's you kind of got me thinking about something. And this, again, it's happened to me many times. Not anymore, though, that you put together a string of good trades. You got, good money. And, maybe your account's up 10% in a relatively short period of time, and you're doing well. And then this one trade that you put on is a little bit bigger than your typical trade, but you were okay with that because you really had a feeling about this and you were on a hot streak. And so, of course, those are the trades that never work out. So the trade goes against you, but you're still feeling pretty saucy, and you're going like, I know this is going to turn around. So you add on to that trade, and you don't sell, because now you're at a point where, well, I can't take this loss because this is my account's, sucks right now. Lost a lot of money that I made on my previous 8 trades or 18 trades. So I can't afford to sell this now. Okay. That's the cardinal sin. Is I can't afford to sell this stock. You should be, if that's your thought process, you should be thinking, I can't afford not to sell this stock. And so you take that one big loss and it wipes out your last 15 gains. And was it the stock? No. Was it your stock selection? No. I mean, we can go through the whole list, but what it came down to was you having that one thing where you lost your discipline that one time. And where we lose the discipline that one time is on a bigger trade. And this is the way I look at it. First of all, why are you trading? write it down, but think about it first. Oh, to make money. Well, are you really? Maybe that's it. Maybe you are trading just to make money, but maybe you're trading because you love the market. Maybe you're trading because you love the action. Maybe you're trading because they all wear masks in frickin' Vegas right now. You go to the casino and everybody's even smoking through a mask and you don't want to go there. And so you just stay at home and trade online and gamble. You know, I actually knew a guy who said, I don't like going to Vegas anymore, so I just day trade. He doesn't day trade anymore. And
2020 was a great year for that.
Oh man, it was awesome. It was awesome. You know, so was 1999. That's when a lot of geniuses were made. But the point is, you have to know why you're trading. Write it down. Think about it. Am I trading to make money? Am I trading because I love the market, but I don't know what the hell I'm doing? Am I trading for the action? Am I trading out of boredom? And by the way, that can be on a daily, like an instant deal right now. Why am I making this trade? Is it a good trade? Or am I bored and looking for something to do? Am I saying, this meets my process, this meets my entry criteria, so I'm going to buy this stock? But on the other hand, if you find yourself going like, well, I'll take a shot. You know, I don't know if this is going to work or not, but I'll take a shot. Okay, that's just discipline. You're not being stupid or anything. You're just being undisciplined. So there's any number of ways that your lack of discipline will kill you, and your application of your discipline will make you more money than you ever thought possible if you're just very, very rigid in it. And, you know, to get back to Mark, that's one of the things that he does. You know, he's really rigid. And, you know, I've seen people ask him about certain stocks, and sometimes I have the same exact statement. They'll ask him about some certain stock and he'll go like, well, you know, hey, go ahead. You might make money on that, but that's not my trade. He just goes, yeah. So, you know, so Robinhood's down, you know, 80% since it was IPO'd. He's not going to say, well, I'll buy it on the bounce. He's going to say, it's not my trade. Mm-hmm. And so what it really gets down to is discipline and fidelity to your plan, adhering to the plan, the process that you have again and again, because then you get better at it. By doing the same thing again and again and again, you get better at it, but only if you're doing it the same way. You know, you hear that statement, you know, practice makes perfect. Well, I can tell you, you know, that's not true, because there's a lot of things throughout my years that I've practiced because I like doing stuff. I love playing the guitar, obviously, other things that I like, and I like to play, so I'll just play them. But am I practicing? No, because I'm just playing them. You know, I learned the solo to Stairway to Heaven, which is actually really hard, especially for a guy like me who's actually a singer who just likes guitars. But I learned it by taking it 4 bars at a time and doing it over and over and over again, and then going to the next 4 bars over and over and over again. If I missed a note, I'd start again. It got to a point where my wife kept shutting my door saying like, you know, I'll leave you alone with this, you know? And so what we're getting at is it's not practice that makes perfect. It's perfect practice, doing the same thing every time. And if you do the same thing every time and it's the right thing, now you're getting really good at it. And
I think that's really good.
Right.
Yeah.
You know what I mean? I mean, that's what you did in your course, isn't it?
Well, that's how I developed my process. I determined what my time frame was. I then picked a process and then have a discipline to stick with it. And I think that's a great way to wrap up this session here is, you know, with a checklist for people. So, you know, pick your time frame. What kind of trader do you want to be? Do you want to be looking at the screens all day long? If the answer is yes, then okay, maybe you want to be a day trader. If you want to, as you mentioned, talk about Bill O'Neill, if you really only kind of want to be passive, look at a weekly chart, you know, and then determine a process for your entries. Okay, well, what is your trigger for getting into a stock? And then how do you define your risk after you've entered that stock, or, you know, before you even put the trade on? And then, as you know, to your point, have the discipline to actually stick to that plan, because it's easy when it's working. But when the market becomes a little more challenging, that's when we can kind of throw our discipline out the window and just be a little more loosey-goosey, because in the past, the market has always bailed us out. But when the market changes, you either have to change with it or, kind of, as you've said before, be on the sidelines and just say, you know what, this is not my trade.
Yeah, you have to know. I mean, what it really comes down to, and like with respect to what you said about your class, I was there with you on that, and I was really, really impressed and pleased to see that, you were saying like, hey man, this isn't the be all end all of trading. It's just my process for my one specific way to trade. And then you taught the whole thing. So, okay, if somebody remember that commercial, Be Like Mike, I think it had to do with, I think that was Michael Jordan, if I'm not mistaken, but Be Like Mike. Well, what you taught people is like, be like Scott. And so if they just execute that process again and again, they're going to do, they're going to do really well at it. So anyway, we've probably kind of worn this topic out, but the whole idea is this: figure out what you like to do in trading, figure out what you're good at, and then develop a plan for doing that. But at the same time that you're doing that, you have to have some self-awareness, which is very difficult to have. Self-awareness is incredibly difficult to have, particularly when it comes to trading. And the reason is because we're looking at ourselves, trying to figure out what the heck makes us tick. And so you look at yourself through this wonderful rosy filter, where you see yourself as being awesome, or on the other hand, I suck. And you don't have an objective view of yourself. So it's really, really important for you to get that. And once you get that self-awareness, you have self-awareness applied to discipline, and discipline applied to a certain plan that you've developed or learned, like your strategy or my strategy or somebody else's strategy. Mm-hmm. You have the discipline to execute that plan. At that point, you can't help but succeed. It's only really a matter of time. And when you get to that point that we're talking about here, here's the thing. Getting to that point can be long, it can be arduous, it can be hard, it can have a lot of stops and starts, a lot of times that you fall down, but then you always got to get up and keep going. But what you're going to find is you're going to get to a point where you are not only competent, but you're unconsciously competent, meaning you're so consistent and disciplined in executing your plan that you're not even aware of your discipline, because it's just, something you do. I brush my teeth every night before I go to bed. Okay. I'm not disciplined. It's just something I do. And so you want to get your trading to that point, but you can have all the best plans. You can have the best mentors, all of that stuff in the world. But if you don't have the discipline to execute what you're not going to be executing what you're just going to be flopping around trying to figure out what's going on with your
I think that's a great point. And just like driving a car, when you first drive a car, you're thinking about, okay, where exactly should my hands go? Oh, I got to stay within the lines. And then eventually it's just, one arm out the window, because you're unconsciously doing the things that you had to think about so hard when you first started. So I think that's a great line. What was it?
Unconscious competence. See, here's the thing. One of the things that I do, it's a great way to teach just about anything. There are 4 stages of competency. There's actually a 5th stage, but that's for another time. 4 stages of competency. It's really a real easy concept to grasp. This is where every trader starts. Unconscious incompetence, meaning you don't even know what you don't know. You suck and you don't even know that you suck, or you don't know why. I don't even, you're just horrible. And then you start learning some things. And these are things that people get, from what you and I do. You start learning some things, and as time goes on, you learn more and more things that you do wrong. And you're going like, God, I don't know what I'm doing in trading. I don't know this. I don't know how to set stops. I don't know how this process works and all that. And then at that point, you have a decision to make. Do you either want to quit, or do you say, well, I need to learn all this stuff so that I can be competent in my trading? And that takes you to the conscious competency part, where you do know what you're doing. But that discipline's really important, because you're looking at your discipline. You're saying, okay, no, I know what I'm doing. And most of the time you do the right thing. Most of the time you do, but every once in a while you trip, slip on a banana peel or something, and then you start over again. So you're competent. You're a good trader, and you are. You know what you're doing, and you know why you're doing it. But then after you do it for a while, you're not even thinking about it. You're just executing it, and to take your car analogy, my wife's from a different part of the country where it's not quite so jam-packed with cars. And I've been driving up and down the 405 freeway for, 45 years. And so a lot of times we'll be driving, and it can be kind of heavy traffic, and, I'll speed up a little bit. And it turns out the reason I sped up was because the car beside me, I could tell, didn't see me. And so I wanted to get in front of him before he swerved into me, because this is what these idiots do out here. They text, they drive, they talk to their neighbor, and, whatever else, fiddle with the radio. It's brutal out here. And then there are other times when, somebody will be kind of in front of me on a different lane, and I'll slow down just a little bit, just in time to have the guy miss me who is going to change lanes into mine. And there've been so many times when Jen has said, wow, you're such a good driver. How did you know that was going to happen? And I'm going like, I don't know. I could just tell, like, body language of the car, whatever it was, but I just kind of knew that. The point is, at this point, after, 45, 47 years of driving, I'd like to think that I'm at the unconscious competent part, where you just kind of know what you're doing. And so we want to get our trading to that. That was a long analogy, but it all comes down to instinct when you really think about it. But when you're new to trading, you don't have instinct. You just have feelings. It's only after you do enough work and have enough experience, look at enough charts, make a bunch of good decisions and bad decisions, will your instinct take over. And all that is the application of your subconscious knowledge. And I'll leave you with this. I was listening to a radio interview many, many years ago of Huey Lewis. And he shared this thing about, he was at a pro-am tournament with some pro, and he was not playing real well. And so one time, he really shanked one, into the jungle. And he got so pissed, he threw his club, and his partner looked at him and he goes like, what are you so mad about? What's going on? Why are you so upset? And he goes, oh, I'm just really mad because I'm playing so bad today. And the guy looked at him and he goes, you're not good enough to get mad. And, you think about that, and it's really true. If you practice something all the time, then you're entitled to get a little upset if things are going wrong. But if all you're doing is slinging stocks around and doing this and that and the other thing with no rhyme or reason, you are not good enough to get upset when you lose money. You just have to say, well, I like losing money, or I don't, and then make a decision after that. So
I think that's really, really good stuff, Dan. It definitely is a mindset. For sure. I recognized something in myself a few years ago, and then we'll end on this.
Didn't we say that 10 minutes ago?
I know. We could talk forever, man. I love your stories. I recognize that every time I started shopping for a nicer car than the one that I currently have, That's exactly when the top was of any trade that I was in, because I was making, I was making good money. And I thought, man, this is going to get, I got to, maybe I'll get a new car out of this. And it was consistent every time. I'm on the BMW website. Look at
I was going to ask you, did your BMW hunt cause the peak in Bitcoin?
Yeah. And so, but that was a mindset thing where, trading and I was unconscious to the fact that the market was getting to an extended point. It was happening. I didn't recognize it at the time. But then over the years, you kind of learn yourself and learn that instinct, kind of what you're saying. So I think that's all really good stuff. And I know that you'll be going over a lot of this in March with your Next Step program.
Yeah, I will. I'll be spending a lot of time on this and giving people specific things, frankly, not just the kind of stuff that we're talking about here where you kind of get the general gist, but it's more like, okay, do this. Okay. Number 2, do this. Number 3, that kind of thing. And there is kind of a formula to it, but, so what I want to do in the future is with you, I'm talking about is I want to talk about other aspects of trading. It's, away from the discipline, but the mental aspect of it is big. Like you were just mentioning about, looking for a car, that's the top, and it could be the same thing, like looking for a bomb shelter. Well, that's the bottom.
Yeah.
But there's a lot of things in the charts that you can look at. And, I've said this many, many times. When I look at a chart, I don't see price action. I don't really see volume. I mean, I do, obviously, but what I'm really looking at the chart for is, okay, what's the crowd doing right now? What are the retail guys doing? Because they're always last to the party and last to leave. And, they don't even get the dregs and the keg, they just get the broom and got to clean up. So you look at charts, you look at the way a stock is trading relative to the news, and that tells you what the crowd is doing, tells you what the institutions are doing. That's the kind of knowledge that if you have it, you can make really good money and not make really bad decisions because you get it. All you're trying to do when it really gets right down to it, because our market is trade in trillions of accounts, trade our financial markets. So you think about that. What are you trying to do? Man, you're trying to figure out what the mob's doing. It's not like, what's Cramer say? Screw Cramer, screw me, screw anybody. Not you though. But the point is, like, you're not trying to figure out what one guy's opinion is. It really doesn't matter. What you're trying to figure out is what the crowd is thinking. What are the institutions thinking? Those are the smart folks in the crowd. If you can get a handle on that, now you've got some powerful stuff that you can use in your own trading, because all you want is to hop on board and let the wind be at your back. And that's what the charts allow you to do. So, and I'll tell people all the time, hey, what do you think about this? What do you think about that? Well, let's look at the chart and see what that says. That's a simple way of saying, like, let's look at the chart and figure out what's really going on to make the chart. The chart doesn't make the trade. The trade makes the chart.
Nice, Dan. Well, I really appreciate your time in all of this, and I look forward to more conversations like this. This was so much fun, and I recommend people check out your Next Step program information on the website at www.stockmarketmentor.com.
Boom. Nice plug.
All right. Awesome, buddy. All right.
Thanks, buddy. I appreciate it, Scott. You have a great day. Yeah, we'll do this again. It's been fun.